Today, we're cutting through the hype to see if the hottest stocks and tokens are actually worth your money. Every day, there's a new name trending, promising big returns but also big risks. We'll break down a mix of traditional stocks like MRM Medirom Healthcare and PAPL Pineapple Financial, plus crypto tokens, Velodrome, Velo, Cow Protocol, Cow, Ancient8, A8, AIOZ Network, and Compound Com. For each, we'll look at what they actually do, their business models, and whether the fundamentals back up the buzz. By the end, you'll know which ones might deserve a spot in your portfolio, and which are just passing fads. Let's get into it. Smash that like button, and let's dive in. First up, let's talk about MRM, Medirom Healthcare Technologies, a company that's quietly making waves in Japan's wellness industry. While it might not be a household name in the West, it's a fascinating example of how traditional health services are evolving in Asia's rapidly changing markets. Medirom operates hundreds of relaxation salons across Japan, offering everything from therapeutic massages to holistic wellness treatments. Think of it as the Japanese equivalent of massage envy, but with a distinctly local flavor, blending ancient techniques with modern customer service. The company is now pushing to expand even further by rolling out a franchise model, aiming to make its brand a staple in neighborhoods across the country. But Medirom isn't just about brick-and-mortar salons, they're also betting big on technology. Their health tech app, Lav, is designed to bridge the gap between in-person wellness and digital health management. The app offers personalized coaching, tracks wellness goals, and integrates with wearable devices, positioning Medirom at the intersection of physical and digital health. This hybrid approach could be a game-changer if they execute well. The appeal for investors? You get exposure to a stable, real-world business with a loyal customer base in a country that values wellness and longevity. At the same time, there's the potential for tech-driven growth as more consumers seek digital solutions for their health needs. If Medirom can successfully blend these two worlds, it could unlock new revenue streams and set itself apart from traditional salon chains. Of course, there are real risks to consider. Currency fluctuations can impact earnings, especially for international investors. The digital health space is crowded, with both local startups and global giants competing for market share, and scaling a low-margin service-heavy business into a profitable tech platform is no small feat. Execution risk is high, and missteps could be costly. On top of that, MRM stock is known for its volatility. As a small-cap international stock, it can be thinly traded and subject to sharp price swings. This isn't the kind of investment you can set and forget. It requires active monitoring and a strong stomach for ups and downs. The bull case? If Medirom leverages its physical footprint to drive digital subscriptions and recurring revenue, it could create a powerful ecosystem, one where customers move seamlessly between in-person services and digital offerings, boosting lifetime value and stickiness. The bear case is just as clear. If the tech side fails to gain traction, or if Japan's economy faces prolonged headwinds, Medirom's core business could stagnate or even shrink. The company could end up stuck between two worlds, unable to fully capitalize on either. Bottom line, MRM is a speculative play. If you believe in their digital pivot and the long-term growth of Japan's wellness market, it might be worth a closer look. But this is not a simple buy and hold stock. Do your homework, understand the risks, and tread carefully. Let's move on to the next opportunity. Next up, let's talk about Pineapple Financial, ticker symbol PAPL, a Canadian mortgage brokerage that's trying to shake up the industry with a fresh, tech-driven approach. You might have seen their pineapple logo popping up in neighborhoods across Canada, but what really sets them apart is how they're blending technology with the traditional world of home financing. Unlike the old-school brokerages that rely on big in-house sales teams, Pineapple empowers a network of independent mortgage agents. These agents use Pineapple's proprietary software platform to connect with clients, process applications, and close deals more efficiently. In return, Pineapple takes a slice of the commission from every mortgage they help secure. It's a model that's asset-light and highly scalable, letting them grow without the overhead of a massive staff. Their future growth is closely tied to the health of the Canadian housing market, which has seen its share of ups and downs, but it's also about their ability to attract and retain top-performing agents. Pineapple's pitch: better technology, more support, and a streamlined process that helps agents close more deals, faster. When the real estate market is hot and homes are selling quickly, Pineapple's business can really take off. More transactions mean more commissions, and that's good news for both the company and its agents. But when interest rates rise or the market cools, things can get challenging. Fewer people are looking to buy or refinance, and that means less business flowing through Pineapple's platform. The company's fortunes are closely linked to these external economic forces. The upside? Pineapple's model is designed to be nimble and cost-effective. By focusing on technology and agent empowerment, they have the potential to disrupt a very traditional industry that's often slow to change. If they can keep innovating, there's a real opportunity to grab market share from slower-moving competitors. But there are real risks too. The company faces intense competition from Canada's big banks, other tech-savvy brokerages, and even new fintech startups. Plus, they're heavily exposed to the ups and downs of the housing cycle, which can be unpredictable. Staying ahead means constantly improving their tech and keeping agents happy. If you're optimistic about the long-term prospects of Canadian real estate, and you believe Pineapple's technology gives them a real competitive edge, this could be a company worth watching. Their platform could make the mortgage process easier for both agents and home buyers, which is a big selling point. Still, it's important to remember that this is a volatile business, highly sensitive to interest rates, housing demand, and broader economic trends. Investors should be prepared for ups and downs, and keep a close eye on how the company adapts to changing market conditions. Before jumping in, look for signs of consistent agent growth, improving profitability, and a track record of weathering market cycles. These are key indicators that Pineapple might be more than just a sweet idea. Now let's switch gears and dive into the world of crypto. Velodrome Finance, Velo, is an automated market maker, AMM, on the Optimism network. A fast, cheap Ethereum Layer 2. It's like a decentralized stock exchange for crypto, letting users trade and provide liquidity. Velodrome's unique V tokenomics encourage users to lock up Velo for voting power and rewards, creating a flywheel of incentives. Protocols bribe voters to direct rewards to their pools, driving more liquidity and activity. The bet, as Optimism grows, Velodrome becomes its central trading hub. Risks, heavy competition, smart contract vulnerabilities, and the need for ongoing demand for Velo. If Optimism stalls, so does Velodrome. High risk, high reward. If you believe in Layer 2S and the V model, Velodrome is worth a look. COW Protocol. COW is a DEX aggregator focused on protecting users from MEV, where bots front-run your trades for profit. Instead of sending every trade to a liquidity pool, COW matches trades peer-to-peer or batches them for the best execution, saving on fees and minimizing slippage. The result? Better prices and protection for DeFi users, especially large traders. The COW token is used for governance and benefits from buybacks tied to protocol success. The challenge: attracting enough users and solvers and standing out from bigger DEX aggregators. If you think MEV protection will become essential as DeFi grows, COW Protocol is a smart, technical bet. But it's not for beginners. Ancient8, A8, is a gaming-focused Layer 2 blockchain built with the Optimism stack. Their edge? A massive, built-in gaming community from their days as a top Vietnamese gaming guild. They offer tools for developers and a hub for players, aiming to be the go-to platform for Web3 games. The A8 token powers transactions and governance. Success depends on attracting quality games and active players. If they land a hit, the upside is huge. Risks: intense competition, unproven Web3 gaming market, and the challenge of building games people actually want to play. High risk, high potential. If you believe in blockchain gaming and Ancient8's community, it's a bold bet. In today's digital world, a handful of tech giants control how most of our videos, music, and media are delivered. But AIOZ network is challenging this status quo with a bold new approach, a decentralized content delivery network, or DCDN, that aims to put the power back into the hands of everyday users. With AIOZ, anyone, anywhere can become part of the network. By running a node on your computer or even a simple home server, you can share your unused bandwidth and storage. In return, you're rewarded with AIOZ tokens, creating a global, community-powered system for delivering video and digital content. This model promises more than just technical innovation. It means faster, smoother streaming for viewers, lower costs for content creators, and a system that doesn't rely on expensive centralized data centers that can be single points of failure or censorship. To drive adoption, AIOZ is building its own suite of decentralized apps, including AIOZ Tube, a blockchain-powered alternative to YouTube. These platforms are designed to showcase the benefits of decentralized media, giving users and creators more control and transparency. The opportunity is huge, with billions of people streaming content every day. But so are the challenges. AIOZ must reach critical mass, compete with both established Web 2 streaming giants and emerging Web 3 projects, and prove that its technology can scale to meet real-world demand. The value of the AIOZ token is directly linked to actual network usage, making it more than just a speculative asset. As more people use the network, the token's utility and demand could grow. Building a decentralized media infrastructure is a long-term vision. It's about laying the groundwork for a future where content delivery is open, resilient, and community-driven. For those who believe in the promise of decentralized media and the power of blockchain, AIOZ is a project worth keeping a close eye on as the digital landscape continues to evolve. Compound, COMP, is a DeFi pioneer, an autonomous protocol for lending and borrowing crypto. Users supply assets to earn interest or borrow against collateral, all managed by smart contracts. Compound kicked off the DeFi yield farming craze and remains a blue-chip protocol with a strong security record. The COMP token is for governance. Holders vote on protocol changes, not revenue sharing. The bull case? Compound's reliability and scale make it a core piece of DeFi infrastructure. The bear case? It's slow to innovate, and newer protocols are catching up with more features and aggressive incentives. If you want exposure to the backbone of DeFi, COMP is a conservative, long-term play, not a moonshot. So, are these stocks and tokens a buy? There's no one-size-fits-all answer. Each has unique opportunities and risks, traditional business models versus bold bets on the decentralized future. The key: invest only in what you truly understand. Use this breakdown as a starting point, but always do your own research. Your portfolio should reflect your convictions, not just the latest hype. Which of these are you most bullish on? Let me know in the comments. Smash that like button, subscribe for more, and thanks for watching. See you in the next video.